All right. It's the 1st of October 2024, and this is the beginning of the last quarter of the year. We're at the beginning of the month, so let's get to the charts and do our analysis. All right. So before we proceed onto the charts, I just want to pull this up again. Um, okay, so this is the purpose of these streams, of all these streams, right? That I've started in September. There are about 14 videos so far. I'll continue to do these. Uh, this is the purpose. Okay. I'm teaching how to draw supply demand zones correctly. I'm teaching you how to identify high liquidity zones to trade from. I'm teaching you how to draw support and resistance levels correctly, and I'm teaching you how to manage risk when your trade goes in drawdown. And if you do these four things correctly, then you will end up with one of these two scenarios, right? If you have a win, it'll be a low risk, high reward, high probability trade. And if you have a loss, then you will lose less than what you plan to lose, right? If you follow these four steps. So the purpose of these streams are to hammer these 4 points home, right? I'll keep driving these 4 points so that whoever's watching, who is interested, and who wants to trade the way I do can learn, right? These are the 4 steps that I follow. In every one of my streams, you'll see these same 4 steps that lead to one of these two, right? The goal is, if we have a loss, we can't control when we'll have a win or when we'll have a loss. It's a probability game. Every trade that we take has a 50% chance of winning and 50% chance of losing, right? So, but we can control how much we lose. So if you don't overtrade, if you don't over risk, and if you manage our trade when it goes in drawdown, then we can lose less than our planned loss, right? So when we have a loss, that's what we're going to do. And if you do have a win, if you do take trades from these high liquidity zones, then we will have we'll have a very low risk, and we'll have a high reward potential on that trade with a high probability of success. Okay. All right. All right. So on the daily, okay. So we got about 20 minutes before the New York opened. So let's run through our usual checklist. Um, on the daily, price has pushed, the previous daily has pushed below 2650 and closed below 2650. It's very likely that we kind of have a bit of a pullback today and maybe continue down. It's possible. But as a session trader, as a trader who's trading just the open hours of the New York session, which is about 2 to 3 hours of the New York session, I really don't care what the daily time frame is doing. I don't care what the monthly, weekly, or daily time frame is doing. I really don't care. It doesn't factor into my trading decisions or my executions at all. At all. Okay, I don't care what the daily bias is. It has got nothing to do with my entries or how I trade the first 2 to 3 hours of the New York Open. Okay, so let's get to our trading chart. Okay, before we go on to the trading chart, I just want to, like we usually do, I just want to show what happened with yesterday's trade that I took. Okay, at the end, if you watch yesterday's stream, if you watch I think the last 30 minutes of yesterday's stream, you will see that I had taken a trade right here at these. Let me just go down to the M5 so you can see the numbers clearly. Here, okay, let's go down to the M1. Yeah, at 263078, 2630.67, right? At these two values, I took a trade, and price touched it, and it went up right to this resistance level that we had drawn. I had a TP level set, I think at 2640. It was set at 2640. If you watch yesterday's stream, you will see the first TP was at 2640. The next one was at 2643. So we ran all the way there to 2640. That's where I closed. That was about 93, 94 pips. With I think I got out at about 95, almost 100 pips. Yeah, with a stop loss of about 16, 17 pips, right? That was a trade that I took. That one winning trade was helped me to recover the previous two losses I took yesterday, right? I took two very small losses, about 0.8%, I think, in total. Each loss was about 0.4% because I managed risk. If you watch yesterday's stream, you'll see exactly where I took those losing trades, how I managed risk when price went against me when I got into drawdown, and how I controlled those trades or kept those trades at about 0.4% loss each, right? And then when I did have a winning trade, I was able to recover that loss very easily because it was a very small loss. I was able to recover that 0.8% and also make about just a little over 1%. Okay, so that was a trade. Now, also yesterday, if you watch the first 30 minutes of yesterday's stream, you will see that we had marked these two light green zones, right? Let me just go down to the H4 so it's clear on the H4. Yeah, so, right. Yesterday's stream, I marked three light green boxes, right? There was one here that we marked, one here, and one here. If you watch the first 30 minutes, you'll see that I marked these two, and then later on I marked this one. Okay, first I marked these two. And I said the price should come to this base and should react. And we came down, we had put a green line there yesterday at 2625 there because there was I think a 1 minute or a 5 minute demand zone right there inside that light green box, and price tapped it to the pip, right? And we pushed up right up to 2650, which is psychological level. So we pushed about, I think, about 250 pips, right? Straight up there. He touched it to the pip right there, right? So I'll just zoom in. So that was a light green. If you look back at yesterday's stream, you'll see this same green box drawn. These three light green boxes, the light, and they all are high liquidity zone. So inside that one big dark green box, which is a high liquidity zone, we had marked two light green boxes. I took my trade of the first one, and I got out about, I think I got about 4.5 RR or something on that trade, nearly 5 RR, and then the price came further down to the second light green box, and I'll just zoom in there um, just to show you guys the demand zone that price reacted to. Yeah, here. Okay, yeah, this one here. So there was a drop and a base and a rally. So you could have taken that drop, three basin candles, and the rally. If you go down onto the 1 minute, it looks even better. It's that, right? Drop, three basin candles, and the rally up, right? So that was 262518, and if you 262518, okay. So that is the. Let me just redraw that just to show you guys how accurate, how technically sound gold is as a pair, right? That's the zone. That's the zone, right? So the close of that is 2518. 2518. Just change the color there. And that's the touch. All right, price touched it and went straight up and never came back there again, right? So that was a zone. It was a very tight zone. It was like about an 8 pip zone, and it went up about 250 pips. Okay, now you don't need to try to take trades like that. The idea is to understand that these high liquidity zones, how well they work, how well they provide low risk, high reward, high probability trades. That's the purpose. It's not about trying to grab very big RR. That's not the purpose of this video. That's not one of the things that we're doing. We're not trying to grab high RR, right? We're just trying to find, we're just trying to very technically and very logically do these 4 steps that lead to one of these results, right? So it's not about trying to take a 10 RR trade or a 15 RR trade. That's not the purpose. It's about waiting at these areas, and when we do identify a place like this, you can place a pending order, put your stop down. We had put we had put this price exactly yesterday at the beginning of yesterday's analysis, and about 3 hours or 3.5 hours later, price it came there, and there was a very good opportunity. Okay. Right. So uh, let's just go back and do an analysis. Let's get rid of everything. Let's get rid of that. Okay. Yeah, let's get rid of everything. Just I'm going to keep the one below because price hasn't touched it. But everything else, let's start from scratch. Okay. I'll talk about these. I'll talk about these later. For now, we'll just start at the top. Okay. Well, let me just get rid of them as well. I just don't want to cause any confusion. Okay. Right. Okay. So we got a clean chart now. This is where current price is. We're around. We're at 2650. Let's start with our supply zones. So there's a supply zone right there. We did all of this yesterday as well. I'm just repeating the process so that whoever doesn't watch the previous streams can still pick up something from every stream that I do. Okay. So we have a rally here, a leg in. We have 2 base in candles, and then we have a leg out, right? So a rally, base, drop. That's supply. Okay. So we've marked that. Further up, we've got this zone here, right? So we have a rally here, and we have 1, 2, 3, 4, 5 base in candles. So let's get that all the way up there, right? So that's a rally, 5 base in candles, and a drop. Price has already come there, right? So we're going to adjust that a little later. This is about 260 pips. Maybe we'll look up a bit higher as well. Here there is a drop. So there is something there. We just can't see it on the H4 time frame. So we'll probably need to go down to the H1 to identify that, right? But we are going to mark that top there, okay? And we'll come back to that. We'll circle back to all of these zones after we do the demand, okay? Now, in terms of demand, we have a zone here, a rally, a base, 1 base in candle, and a rally, okay? So that is our first demand level closest to current price. Let's move this across. Let's move all of this across. Okay, so we have about 3 supply zones roughly above current price. We have 1 demand zone here. Further down, we have a drop, a base, and a rally which price actually tapped into it. So, but nevertheless, there is a zone there. So we have a drop, a base, and a rally. And then this one already tapped into it and went up. And then on the left here, we have this. Yeah, price. Okay, so we have a rally. 1, 2, 3, 4, 5, 6 base in candles. So we got to come down here. But price has already come deep into it. So there is a little bit of the demand left. So we're going to bring it down here. And we're going to look at that. We're going to have to bring it down here, right? We're going to have, because that is the demand zone right there, the way I had marked it, but price has come deep into it. So there's a little bit of that demand still left because price didn't break through it yet. It hasn't broken through it yet, right? It may in the future, it may today, it may tomorrow, it may next week, but until it breaks through, there is a little bit of that demand left. So it's important to mark it so that we know that that is a demand level. That's the origin of that demand level, and it's been tapped, right? It's been tapped, right? So then, now that's about 280 pips. Okay, let's draw one more here. Okay, so we have um, a drop and a rally, right? First we had a rally, two basin candles and a rally, but price came through that zone. So this was how we would have originally drawn it. But then price wicked into that zone, right? Wicked into it and then pushed up. So this is now consumed. So we're going to look here, and now we have a drop and then a rally. There is no base. We're going to go down to the H1 later and see if we have a base in candle there, right? It's kind of, I like to see a base in candle. That's kind of important to me. And then we have, this is fairly simple. This we had drawn yesterday, a rally, a base, and a rally. Okay, leg in, base, leg out. Very simple. Okay, now let's just put in the numbers here and then go down to the lower time frame to refine them. So it's the first. Okay, we're going to go down to the H1. Yeah, we're going to take that one, rally, base, rally. Okay, rally, base, rally. So we're going to, there is a demand zone here, drop, base, rally, plus after this rally, base, rally. So we're going to take both those zones, because both those zones we're going to we're going to combine it, both those H4 zones into one H1, both those H1 zones into one H4 zone. And the open is 2164 and the low is 392. Okay, 2164, 392. Okay, right. Now, okay, we've got that here, right? We're gonna, before we do that, let's start here. This is close is 312 and the low is 454. 312, 454. Perfect. And then we have price came into it, so this low is 474, 4, 474, 4.34. Okay, perfect. Now price came, this was the demand zone, like I said, rally, and 1, 2, 3, 4, 5, 6 base in candles, and then the leg out, right? This big massive move up, and price is reacting to it and pushing up. So prices come deep into it. So the low of this is 268, 474, 268, 4. Okay. 4. Okay, that is what we got in terms of demand. Okay, let's do supply quickly. 604, 275, 2775, 604. Okay, and then here this high is 7793. Okay, and then we're going to go here to the H1 and check. Yeah, we do have a zone there, a rally, but price has come into it. So we're going to 558, and this high is 793. 558, 793. Okay, perfect. It's just important to understand where the origin of the move was, right? That is why I'm doing this. So price has tapped into it. So when I go down to the H1, I can quickly see there was a zone here. Price has already tapped into it. That is why, but this area could still be valid, right? Because price hasn't come here yet. Okay, there is supply there. Now we don't know if that supply will give us a trade or not, but we just have to know that there is supplies there, right? Because what we shouldn't be doing is we shouldn't be buying right here. That's what we shouldn't. That's the purpose of these red and green boxes. We don't buy in these red boxes and we don't sell in these green boxes. We buy in the green boxes and we sell in the red boxes. Okay. All right. So those are the zones. Just get rid of that. Get rid of that. Okay. H4 supply. Now we're going to do find out which of these are high liquidity zones and which are not. Okay. So this zone, this drop, took out this demand. There was demand here. There is a drop and a rally, right? So there is a base there. On the H1 time frame, if you go, I'm sure you'd see a base there. Yeah, there is a base. That is the base, the drop base rally. And this move took it out, right? So making this a high liquidity zone. Now we're going to check the one above. This one took out this demand here. There was demand right here. So if you go down to the H1, you'll see that this move down took out this demand. There was a drop, a base, and a rally. And this move took this out, right? This low out and this demand out. So making this a high liquidity zone. Okay. And then the one above, that one took out this demand here, took out this demand here, making that also a high liquidity zone. Okay. Okay, is that clear? So we have a rally and a base and a drop, and this drop took out that demand here, rally base rally, and this rally base rally. There was small demand, there was a H1 demand here, H1 demand here, all taken out by this one move down, making this a high liquidity zone. So we have 3 high liquidity zones above. Now let's see if the demand those zones that we have, if they are high liquidity zones. Okay, so this one here. Did this take out anything on the left? Yes, it did. So this here is a supply zone, right? We have a rally, a base, and a drop taken out by this move up, right? So this high was 44.29 and this high is 44.38. So this high took out this zone, right? Making this a high liquidity zone. Okay. Okay. Come down. Do we have a high liquidity zone here? This one took out this. So there was supply here, right? Rally base drop, didn't take out, pulled through, then took out. This is not really a high liquidity zone because this zone is the one that took out this and that. But we're going to keep it, right? We're going to keep it. We're not going to mark it as a high liquidity zone because this move up from this zone didn't take out anything. It pulled back and then it took out, right? So we're not going to mark it as a high liquidity zone. We're going to keep that zone there and pay attention if the price gets there. Further down here, now we have a very little bit of room left on that, just 17 pips. So price has tapped that zone now. I'm no longer going to be marking that high liquidity zone, but there is demand left there, right? That's important to note. The one below, is that a high liquidity zone? Here, let's go down to the H1. This one took out that supply, so there was supply right here, right? This move took out that, so this making this a high liquidity zone. Okay, I think that's good for today. So that's what we've got. Okay. Okay, so what's happening on the daily? Price close below 2.6, so I'm just going to put the analysis for the group here. Okay, so in terms of news, um, we don't have anything today in terms of news. Well, there is about 2 hours from now, there is that. Um, it's not going to move price much. This week, you got to remember that we are setting up for NFP, right? This is NFP week. So this is all kind of setting up for what's going to happen on Friday. Kind of charts are kind of setting up for that, right? I generally don't really like trading too much this week because it's a very volatile week, and you got to remember trading has a double-edged sword in many in many ways, right? And what I mean by that is you'll get so a week like this you'll get a lot of volume, right? So just as much as your TPs can get hit very quickly because of the volume, your stop loss also can get hit, right? So you got to keep that in mind, right? I rather trade in conditions where I rather trade in more predictable conditions. That's what I'm trying to say, right? So in high volume weeks like NFP week or CPI week or interest rate week, these weeks have tend to have a lot of volume, right? So yes, if you take the right trade, if you get in, fortunately, if you get in on the right trade at the right zone, you'll hit your TPs very quickly. But price can always pull back a little bit for liquidity and stop you out very quickly as well. You've got to keep that in mind. Okay, so now NY has opened. Now we're going to see what price is trying to do here. Okay. Um, we had a big move here, but price already came back into it. Okay. So let's go to M30. Better. Yeah. So we had a big move here. This candle has no top wick. So price is going to take out this top, is going to go above this, right? It's going to go above this and it's going to go above this high. Okay, so we are about 55 pips away from this side. Price is going to get there. It's going to get there today, right? It's going to get there, take out that high, and then probably take out this high as well. That should happen as well. If it takes out this high, it's going to trade into this range and take out that high as well, right? And that high is about 70 pips away, right? Because this candle has no top wick, and even though this is a high liquidity zone, um, this was the candle, these two candles on M30 that caused a drop. Um, yeah, just let's look at them on M15 and see what they look like. Yeah, yeah, price is gonna come here. It's gonna take out this high. It's gonna take out this high and it's gonna take out this high. That's gonna happen for sure. Then we have this candle here. Um, that candle there. Okay, price has tapped it. If price hadn't tapped it, I'd be a little bit more interested in this. But price has tapped that candle, right? That's my concern. Price has already tapped it, and um, we're very likely to go higher than that because we've already tapped these candles. But we're going to mark that candle anyway. It's yeah, it's visible on the M30, and then there's a one above that as well. That candle there as well. Mm, no, not really that candle. No, not that candle. This candle. This is the that's the candle that I'm interested in. 449.46. 449.46. Okay. We're going to pay attention to that. We're going to look for. Let's just very quickly look for a zone inside that. Yeah, there's a zone there. I'm going to mark that zone there. Open 159. 159. So that's a drop, a base, and a drop. Okay, there is supply there on the 5-minute time frame. Just go down to the 1 minute. Here, zone here as well. A rally, 3 basing candles and a drop. Okay, and price couldn't get there. Now, that if we take, that's about 27 pips. That's fine, and that's about 17 pips. That's absolutely fine. Okay, so the close of this is 273. Yeah, 273. Okay, so we are currently about 60 pips away from this zone. Okay, 50 pips away from this zone. Price can always, we've seen this happen. I've seen it happen many times. Price can just tap this light red area and then continue to push down and not come up here. That's very possible. So we are going to keep an eye on this area. This high is going to get taken out. This high is going to get taken out. This high is going to get taken out, and price is going to come there. And price should technically take out this high as well. This doji candle should take out that high as well. And soon as you take out that high, then we might have an opportunity to take a sell trade here. Okay, but I'm not very interested in this area, right? I'm more interested high above. So let's look a little above. Let's look at that candle. Yeah, this candle here, right? This candle here. This is the candle that I'm kind of interested in. Right? That's the candle that caused the move, that started this drop. Okay, so with this method, where sorry, no, too far out. Sorry, it's here. Okay. Tapped into this, and then we dropped. So this candle, this area right here, we've come close. The close is 615, and this high is 604. We came close. That wick there. We'll just mark that wick. 640, 70, 72, 640, 70, 72. And just look at that on the M15. What does it look like? Yeah. Yeah. So that's a liquidity wick, right? That's a clear liquidity wick. It's visible on the M30. It's not visible on the H1. That's fine. I don't like looking at for liquidity wicks on the H1, but very visible on the M30 and very visible on the M15, right? So price grabbed liquidity from the zone, pushed down, tried to come back up, couldn't, and continued straight down. Okay, we went down 228 pips, tried to come back up, couldn't, and we dropped. This second drop doesn't matter. It's the first drop, right? So price dropped all the way about 225 pips, right from there. So I want to pay attention to that zone. I'm gonna again do the exact same thing. Look for supply there on the smaller time frame. Yeah. So we do have supply there right here. A rally, a base, and a drop. 67.79. Let's mark that well here. 67.79. Now, yesterday I had marked these, but I had just stepped away from the chart and I couldn't place the pending order. So I'd missed that really tight entry, which is with about a 6-7 pip stop loss. And I had to take the one a little higher than that. But I'm going to try to stay at the chart today, so see if price gets here to see if we can take a trade. Yeah, so this zone price hasn't come to this area yet. It came close, it hasn't come. So it's got about 18 pips away. And that zone stop loss 29 pips, that's fine. Go down to the M1. Um, hmm. I just don't like this candle. That's better. That no. Mm. Four three four 944. 434 944. Six nine 44. 7072. Right. $71.26. $30 pips. Yeah. It's okay. It's to 90. Okay. So in terms of sells, now price is nowhere near demand, so we're not going to We're not going to worry about price coming to demand right now. It's about 175 pips away, so we've got some time. But in terms of sales prices, more prices in supply right now, we are inside the supply zone, and we are coming to the area that I said it would. Here, this high here, it's going to come. It should come to this high. So the first area of interest, the first area of interest is this first red box here, right? It's that candle that we marked, that M15 candle that we marked out. Now price has come into it, but it hasn't come deep into it. So I am going to pay attention to that when price gets there. Okay, that's the first area of interest. And you guys saw how I did it and why I marked it the way I did, because of that candle. That candle is a liquidity grab from this area, and that was the cause of the move down. Okay, so that's the reason for that. Now, but price has come there, so because price has come there, I'm not too keen on that, right? This, however, price hasn't come there. It came close. It didn't tap into this red area, right? That's a liquidity grab, and that's a liquidity grab. Those two, and that's a liquidity grab from our weekly level of 2672. There is weekly resistance there, and it tapped that perfectly, and it dropped, right? Yeah, it dropped here. Let's say it dropped here, about 225 pips. So we're going to pay attention to these three light red boxes: this, this, and this. And these green lines that I've drawn are supply 5-minute supply zones inside that light red box. 5-minute supply zone inside the right light red box. 2 supply zones inside, 1 minute and 5 minute inside the light red box, right? These are the 3 zones that we're going to pay attention to for the next hour, hour and a half. Price to get either here or here and reverse. Okay. um, yeah, and then we have this candle here, this big candle here. That candle, the 5-minute, that should be 2 candles. Yeah, that's 2 candles. Perfect. So this high is 426, the low is 864. 864. Okay, right. So this is the one even higher than that, right? That's the one even higher. That's a broader zone. It's a very big zone. So price needs to break these highs and come much deeper for us to be interested in taking a trade. There's a supply zone right there, 82, 2682.07. I'm gonna mark that as well. 2682.07. Okay. Let's go down to the M1. Three two six. Okay. Right. So these are the areas inside these high liquidity zones. So we had marked at the beginning of session, we had marked these red boxes as high liquidity zones because they are taken out opposing zones. So within those zones are liquidity candles that grab liquidity. Those are the ones that are marked with a lighter red box. And inside that inside that lighter red box are M5 supply zones, which are marked with these green lines. So these green lines are potential entries, potential sell entries. But we're not going to place any pending orders. We're going to wait for price to get close to those lines to see what we should do. And if we do get in a trade, then obviously the stop loss is going to be either at the top of that dark red box or at the top of the light red box if you enter here, right? So if we enter here, then our stop loss is about 40. That's a little high. So maybe there, right? About 27 pips. We put our stop loss above that and then we take a trade. And same goes for the rest as well. Okay. 67.79. Why is that there? 67. Okay, got it. Okay, now just to recap what happened, just to look at what price has done so far, not recap, just to look at what price has done for the day so far. Okay, so okay, that's the open. That's where the market opened, right here. So that's the Asian session low, right? That's the Asian session low. Let me just mark these out so that we just that's the Asian low. 5, 6, 7. Yeah, that's the Asian high. That's the London low. That's the London high. Right there. Okay. So this is what price has done so far. Price opened here, created an Asian low, pushed up, came down, respected the low, broke the high, continued, created a London low, pushed up, respected the low, came up, created the London high right there, pushed down, broke the high, retested the high. So just go down to the M15 to make it clear. Let's start again here. So this was the Asian low, pushed up, came down, respected the high, retested the low, Asian low, pushed up, came, retested the low, went up, created the high, came down, broke the high, went up, created the London low, pushed up, came down, retested the low, respected the low, pushed up, created the high, pulled back, broke the high, came down, retested a demand zone at that high. That's a demand zone right there. Rally, 3 basin candles and a rally. Okay, retested it, and now it's pushing up, right? So price has been very bullish today. So in the Asian session, we moved about 66, let's say about 70 pips, and then in the London session, we moved about again about 75 pips each, right? Roughly about the same move in the Asian and the London, right? Now price has moved a total of about 245 pips today. Now we got to see what's going to happen in the New York session. Now New York, it's been about 30 minutes since the New York open. Price is pushing up. That's what it's doing. It's pushing up. It's creating higher highs and high lows, right? And pushing up. Okay. So at any point, now that these highs are taken out, 2 highs are taken. The previous one took out this side. This one took out this side. Price can respect this high and drop. If it does that, then I don't know, I might not getting on a trade because I wanted price to come deeper here. Because it is reacting to this candle. That's what it's doing right now. this bearish engulfing candle. That's what it's reacting to right there. Right, this high 914075. 4075. Okay, that's that candle. That's if we go to the 15-minute. We'll see two candles there, right? Two candles there in that M30 candle. That's what price is reacting to that zone. That zone is quite big. It's about 85 pip zone, but inside that is an M15 smaller zone there. The closest, let's go down to the M5 and see if we have something tighter. Yeah, there's one there. So open 515, close 514, 5, 5. And then we have this one down here as well. The price has gone deeper into it. See if we tapped it. Yeah, we did tap it. We tapped it and we are pushing down. Perfect. I am going to take a trade there with the stop loss above here. Above this high here, 59.14. 59.14. 34, 44. Okay. If price breaks this high, I'm going to close. That one right there. That was the open 656, 661, 656. Yeah, that was the right entry. Would have been there. So 26 pips away, I took it. So if you break this high, I'm going to manage risk. But if I 56, 56. Stop loss is the same. Right. So that trade is a little bit away. So that's where price came to, right? So rally, base in candles and the drop. Okay, that's a base in candles and the drop. That's where price tapped and dropped here. So you want to see if price can come down at least there, right? Come to this area, come down here to this area, down. It's just a little bit late on this because this was the candle, this big bearish candle, engulfing candle, which is in this high liquidity zone, is what price is going to react to first. This big bearish engulfing candle here, right? So in that bearish engulfing candle are two M15 candles, and then in that is an M15 supply zone, M15 supply zone. You have a rally, you have all these basin candles, 1, 2, 3, 4, 5, 6, 7, 8, and then the drop, right? So that the lowest base is 2656.56. Stop loss above that big candle there. And then price did tap it and dropped, right? So let's see. It's the M15. Yeah, this high is 669, low 362. 62669. Anticipating price to come down here to 26, roughly to this area, or let's get rid of these ones. We don't need these anymore. This candle here, 5 minute looks clean. 1 minute also looks clean. We did touch this, I think. High 066787 787066, and no, it didn't. 26. High 14. No, we fell short. Okay. Okay. Mm. These two candles. This caused a drop. This M15 candle here. This M15 candle. This M15 candle. That's what price came to. Yeah, so we're going to leave that trade. And if price does break this high, I'm going to manage risk. I'm going to close partial positions. But I've got an entry higher. The price had already tapped. I'm going to take that entry maybe there or even a little higher than that. Because this is a bearish engulfing candle. These are two 15-minute candles and that one M30 candle. That price is now kind of trying to react to, because we've been very bullish now, right? So NY has opened. It's about 45 minutes since NY opened, so we've kind of pushed up since NY opened. We've pushed up about almost 100 pips. So kind of looking for a pullback in this area. Not a reversal, maybe not a reversal, maybe just a pullback, right? To get us back to this area of 2650, or this fib level here. Yeah, I would have been happier if I took the trade up there, or here, or here, or even here, or even here. But where I have it is a little too low. I should have taken it a little higher. Then I wouldn't have to sit in any drawdown if I'd taken it high. Because that's the area, that's the supply zone that we're reacting to. In that light red box, this is the supply zone that we're reacting to, right? Because it tapped it to the pip 2656.56 and it dropped. It dropped about 32 pips. Yeah, that's the zone. Five-minute. There's nothing on the 5-minute there. No, there's nothing. Except for this one, but then my stop loss, I'm gonna get stopped out here. It's 9 pips. Close 854. We did tap that. Did tap that. We pushed down. So now in terms of support resistance levels, we have Mm. Price is pushing back. It's pushing up. Creating support here. Created resistance there. Yeah, I'm going to wait for this 15-minute candle to close. 11 minutes more. That'll be the 1-hour close as well. We are rejecting that area, and this candle has no bottom wick. And that's a good 37 pips down. I'm going to wait for the 15-minute candle to close. I'm not going to do anything until the 15-minute candle closes. Okay, in terms of support resistance levels, we have resistance there. Yeah, kind of. Yeah. But a resistance level, the price needs to close below that. And we also have a level there. As well. So price needs to close above, close below this to continue down. If you do get a reaction here, then that means we're going to continue up. So price may come down to this resistance level. Maybe a bit broader. $175. $175. That high there. 0.96. Okay. Okay. And then this one, yeah, 805, 5. So 135. Okay. So those are the closest two support levels that we have, right? Closest to SR levels, or support turn resistance or resistance turn support, right? Price needs to close below this one to continue to this, close below this to continue to this H4 demand zone. All right, pretty straightforward. If price pushes down and reacts to this, then we're heading up. Okay. And I'm going to watch the minor time frame, maybe the 5-minute, to see if you get a reaction here. If price is pushing up, closes above pushing up, then I'm going to close this trade here because we could push up. So if you look on the M30, I think they align as well. They're pretty much okay on the M30 as well. Got a tap there, tap there. maybe this is incorrect. Maybe that is. Hmm. Hmm. Yeah. 23. Yeah. It's very slow today. It's very, very slow today. Okay, so those are the levels, right? Um, so if price comes here, it touches that, partial position should close. Um, price should come to this 2650.5. It should come to this candle, to this fib of this this fib level 2650.5. It should come there. That's about 34 pips. So that's what I'm kind of expecting price to come down there. Yeah, so we reacted, we tried to pull back, we reacted off this 2655, push price down. So we should come here. We should come to 2650.5, right? Price surprisingly didn't come to the top of that candle, that M30 candle there, because that was a bearish engulfing candle. So we are reacting to that candle now. Price went in the middle of that candle and reacting to it. Yeah. So okay, that's better. We did tap that. We did tap that. We didn't come high, 26573. We didn't come high, but we did tap the supply zone there. So that usually happens. Price doesn't need to come exactly to the pip of the fib, but could tap the supply zone. So we have a rally, all of that at a base, and the drop, the true. This is the M30 candle. On the M15, that are on the M15 time frame, it's two M15 candles, but this is the liquidity candle. There is no wick on it. There is no liquidity wick, but it's a bearish engulfing candle. So sometimes you get a huge wick, which I call a liquidity wick, or you get a bearish engulfing candle like this, which is also a liquidity grab. So um, if you that candle there, right? It's It's a big push down. Okay, so we did reach support. Partial positions did close. Now we have less. We can lose less than what we. So price gets up here and breaks the high, then I close the trade, right? Um, so if it gets up and breaks the high, then it's a break-even trade. But I want, if price does come here, I'm going to close the trade because I took a very bad entry. My entry should have been up here, either here or here, right? So it's a good 19 pips short of that. So entry should have been up there. So for that reason, if we get to 2650.50, I'm going to close the trade because I don't want to hold this trade in drawdown when price reverses at this. If it reverses at this support level, right, that we have marked here. So now we've touched the support level. Price has just touched that support level. That's a support level that we have drawn. Price has touched it. Now you want to see if price can push down here, or we're going to reject it and go further up. Okay, so if it does come down, I'm going to close the trade. Comes to yeah, we are coming down. Yeah, perfect. We are coming down. It should come down and tap that 2650.50. Just this is the close of the, yeah, here we go. Yeah, there we go. Couple of pips more. High 55.94. 55.94. Okay, so I put my stop loss just above the M30 candle, right? So now just gonna lose like maybe less. The reason for this, I'm trying to close this trade, is because it's a bad entry. The entry should have been higher up here. Somewhere there, I would have left it. But I don't want to hold 15 pips in drawdown. So this M15 candle closed right at that support level. There we go. Oh, we touched it. Okay, we touched it. I closed the trade. The reason I closed it here is because my entry was down here, right? So that was about, I closed it there. That was about, where did I enter? I think I entered somewhere here, right? Somewhere here. So that was about 40 pips, right? With a stop loss of about uh, 15 pips. I took a very small position. I should have taken a bigger position. I took a very small position because I was anticipating price to come higher, right? And it didn't. So I'm going to close my pending orders now. And price has come exactly to 2650.50 as anticipated. It respected this high. So the fib was drawn on this candle because we took out two highs. This candle took out that high, that candle took out that high. We draw the fib and then it touched the sniper 2655.92 and then it dropped straight down here, 54 pips. So my entry should have been there because it's within the light red box. It should have been right there with a stop loss above there, 7-8 pips, and taken that trade, but I was preoccupied with drawing the zone that I missed it and I took it down here. So I got about 38 pips on it, but that's fine. That's okay. Yeah, that's the trade that I took for the NY session. Now, I don't know if price is going to continue down. If he close below this support, if our M5 candle closes below this support, then we are continuing to this support here. And then if we close below this support, we're coming down to this demand zone here. Okay. Yeah, we're coming down. Now, let's look at this high liquidity zone where price is coming to and see if there is a candle there or a reaction there that we can take a trade from. Okay. So first look at the H1 time. So H1 has rejected that area perfectly. It's rejected that area. We are pushing down. Okay, we are pushing down. So it's very likely if we close below this support, then we're coming down to this demand zone here, right? We're coming down to this demand zone, and then if there is volume in NYSC, we're going to continue through this demand zone and go down further down. Okay, that's possible too. That's very possible that we break through this and continue to this demand zone, and that is about another 200 pips from current price, right? But we're going to first take a look at this high liquidity zone and see if there is an opportunity there, low risk, high reward, high probability setup there that we can take. Okay, this is a liquidity grab from these 4 M15 candles. That's a liquidity grab, so I'm gonna kind of mark that out. We're gonna take a look at it later, but for now we're gonna just mark it out. Okay. On the H1, yeah, that's fine. On the H1, the H4, it's a wick. It's that wick. It's within that wick, so it's perfect. That's within the wick. And it took out the zone on the, just took out that zone. Came down, yeah. Go down to the M30, yeah. Go down to the M15. Now the M15, there is nothing much there. The M15, there is nothing much. Yeah, so we closed, an M5 candle closed below this support that we had drawn. So price should continue down now to this support. Or it could also react to 2650. You got to keep in mind, because 2650 is a psychological number. We could react to 2650 because 2650 is way more important than this M30 or M15 or M5 support level that we've drawn. You've got to remember that 2650 is a psychological number, right? Those psychological numbers contain a lot of liquidity where price can reverse or bounce off these levels. So we've tapped 2650, so price can push up. So even though it's closed below this support, when you have a psychological number in between them, price can always react to that instead of coming down to the next support level, right? But price could come, if it has volume, now we could come down to this support. If we close below this support, then we're coming down to this this demand zone. And we're going to take a look at this. Yeah, seems like we are coming down to the demand zone. We're coming down to this support. Here, two M5 candles, right? Those two M5 candles right there. So this high 839 462 839 462. Okay, yeah, we are coming down. So very nice trade. If I had got in higher, I would have held it if I'd got in higher. The only thing that we can control is risk. So if I had held this trade, and if price did come against me and did I go in drawdown because I had taken such a bad entry, then I have only myself to blame, right? Because I don't know, there is no guarantee is price going to come down or is it going to reverse back and come up for more liquidity. There's a 50% chance of that. So that is why I protect the loss and I close the trade. Um, it's almost nothing. It's almost a nothing trade, but still, because I don't want to lose out unnecessary on a bad entry. Okay. Um, because as long as you manage risk, the market will forgive your mistakes. If you know how to manage risk, the market will forgive your mistakes. You got to remember that. Now we've touched support. We've touched the next support. We are reacting off that support. We touched it to the pip. We closed below this. We touched this to the pip. That's what we had anticipated. If a 5-minute candle closes below this, we're coming down to this. So it did. Now we are reacting to it, right? And we're pushing up. We could now push further up because that is also in line with the 2650 area, okay? Or we react here and now we continue down again. Anyway, so we got these two 5-minute candles here. Yeah. Let's look at the M30. That's within the M30. That zone is a 37 pip zone. That's fine. That's the Asian session. That's the Asian session. Came down. Grab liquidity, went up. Grab liquidity and went up. Okay, I'm going to mark that. I'm going to keep that zone marked. 5-minute. We'll just keep it marked there and see what price does when it gets there. We are quite a bit away from it. We're a good 125 pips away from that zone. So I'm going to just wait and see what price does. This candle is late in New York. Snow week. Yeah. What I would like to see is price to continue higher. Now that we've tapped this support, we continue higher. We break. We reacted to this zone here, so we break this zone now. We go higher. Maybe even here. We come back. We come up here. That's what I would like to see, a push up of about 120 pips. Now we've created a new high in New York session, so price may pull back, create M30 support, and go to retest that high. And once it retests that high, I would like to see price continue higher, and then we get a trade after the 4-hour candle closes, which is in about 45 minutes now. So from about 45 to an hour and a half from now, then we get a sell trade from here. Or in about 45 minutes from now, we get a sell trade from higher up there, down. That's what I would like to see. Yeah. In terms of support, this is not really important because we've got a zone right there. Yeah, once we close this, we should come further down. There's no reason price should yeah, touched it, perfect. Yeah, that's reacted. Yeah. So that's the next support level. Now, but price is reacting to this. It's pushing up. So if you go down to the M5, yeah, so we get a, yeah, so we have a reaction there. We haven't closed inside it or below it. So price touched it and is pushing up. And just above it is a 2650 round number, big round number. So price is kind of reacting, touched it to the pip support, and now it's pushing up. Okay. Price needs to, a 5-minute candle needs to close inside this gray box or below it to continue to this. If it comes to this, then it's going to come touch the green area, but that's the next support level. See, we had a support level there, one here, now here, right? Now now this support has should turn resistance if price needs to continue down. This price needs to reject this area and continue down. Okay, that's how support resistance works. So if it closes below one, then it'll pull back, react to it, and then come to the next one below. So for price to come here, it has to react to this level to come down. Hmm. I like the M30 candle. I like that M30 candle. Right, strong, no wick at the top, no wick at the bottom. A lot of selling pressure and push price down. Right, price tried to come back up, it couldn't come back to the high, it just fell. Right, so that is good, and we did get a reaction there. Okay, but on the M15, it looks ugly. Looks ugly on the M15. And that is why I'm hesitant of drawing a fib there because it looks ugly on the M15. Price is pushing back up, so we might just continue higher. Yeah, the moving averages have crossed as well, so price could pull back, touch the EMAs, and continue higher. That's very possible. The EMAs have crossed. The fast moving average has crossed the slow moving average. This indicator that I'm using for the New York open lines and my end of trading session is all available under this video. There's a link to it. This indicator also provides buy and sell signals. Right? It also provides buy and sell signals. So for example, that is a sell signal, right? We are looking for a sell trade from that light red box. So that's a sell signal right there. So as soon as the signal comes and the next candle breaks the low, you can open a trade, put the stop loss above that or above that, and you can take the trade, and you would have made about 1.5 RR, and your trade will still be in profit because that would be your entry there, right? Or if you when you're using the indicator, you will get as soon as this candle breaks this candle low, you'll get the indicator will show you where to play the stop loss, where to place up to 3 entries on this candle, and where the TP levels are. It will show you everything, right? When this candle, uh, so for example, just right there you go, right? So that's how it shows you 3 entry levels. So you could have taken this entry here, stop loss above there, it's a 15 pip stop loss. You could have taken this entry here, that's about a 29 pip stop loss, or you can get taken both those entries, and this one got triggered, this one got triggered, and then these are your TP levels, right? That's one, and that's the other one there. So when price comes here, you close partial positions, and then when price comes here, you close, partial positions again, and you let the rest run to TP3. Okay, that's how you would trade the signals of this indicator, because we are in the light red box. So I provide these zones in the group every day. So we are in supply. When we're in supply, we don't try to buy. We always look for a selling opportunity, and that's the perfect signal to take the selling opportunity. One entry there, one entry here, stop loss there, exactly how it's shown here. And these will remain, these stop loss entries and TP levels will remain for up to an hour after the signal candle, up to 1 hour. So you have plenty of time to take this trade. But you got to take it soon as the one breaks. Soon as it breaks, you got to take it, right? So for example, this candle opened at 15:45 on my server time, um, right? Sorry, it opened at 15:45 on my server time, and if you go down to the 5 minute, sorry, just got stuck there. Okay, so you go down to the 5 minute, you can see that once, yeah, here. This is 1545, so price broke the low and then pulled back up, would have got you entry right here and then come down, right? Would have got you entry and come down. So came down 66 pips, you would have had a stop loss of about 14 pips, and that's your stop loss. That's exactly where that is, that line is. It shows the price, 265614, that's where you put your stop loss, and that's your entry, that's one entry, that's the other entry, and perfect trade, right? Straight down 65 pips, 14 pip stop loss. Okay, so that's how you trade the indicator. But for the purposes of this live stream, I don't use the buy or sell signals of the indicator because I'm just trying to show you, if you did not have the indicator, if you did not have any um, if you did not have any tools on your chart, or on a naked chart, you could still trade. You could still trade without anything, right? Okay, so price did react to that support level, pushed up. We are pushing back up, right? The M30 candle is about to close in about 4 to 5 minutes. So yeah, so we've made a high. Very likely we're going to retest this high now. And if you do retest this high, then price is very bullish at the moment, so we could go higher. Okay, so that was the initial plan anyway. The initial plan for the day when we started the session was that price will tap into this high here, because this is a flat top. This is a lot of bearish volume, but there is no top wick. So price is going to tap into that and maybe even go higher and take out this zone and go up here, right? That's possible. But we've marked these light red areas here to see if we're going to get a reaction here and take a trade, just like we did here. We got a reaction, price dropped 70 about 80 pips, about 78 pips, and we got a trade there. Okay, with a fairly tight stop loss, not too big, very manageable. I wouldn't say tight, I would say manageable, because my entry was bad. Um, but if I got in here, my stop loss would have been very tight. It would be around 8 pips, and that's about 78 pips trade. That's because we're anticipating price to come down to this support level here, which is very close to 2650. That was what we were planning to, and price did come there. If you go to the 1 minute time frame now, we'll see that price touched it. We got a strong bullish move up, and we are continuing up, and we closed above 2650. So if you look at the 5 minute, we closed above 2650. We've closed back above this first support level. We've closed back above. So now we're continuing, we're very possibly continuing higher because we've closed above it. The 15-minute candle, if the 15-minute candle closes above, then the next one should break and we should continue higher. Okay. Yeah, let price move. I'm not looking to take any trade right here now because this one has already done its job. So let this 15-minute candle close, let the next one open, and let the next one close as well. All right, I'll be back in about 5 to 7 minutes. Okay, so we have a sudden push up. Perfect. This is what we were anticipating. Price to break these levels, continue higher. Um, yeah. Perfect. Perfect. So price traded. It made a new high. It made a new high in NY session. Pullback, created M30 support, and then retested the high and broke and went high. Right. So great. Now we're going to break. So we broke this high. That's what we said at the beginning of the session. And we said very likely we're going to break this high as well. And we're going to come here. So that is what I'm anticipating. Price to come up here, right? That we're going to continue. We've broken this. We've come to this candle now. We've got to just pay attention. We've come to this candle, right? But we're going to wait for this M15 candle to close. So I'm not going to do anything right now. Just going to wait for the M15 candle to close. Um, it's got about 10 minutes for this candle to close. Yeah, this is very ugly on the M15. On the M30, there is a liquidity grab there, but that is from that level. So, yeah, this is Asian session high. Not too kicked about that. That is the New York session. That's better, right? This high was created during the Asian session. So price should break this high. It should continue higher. And once you break that high, then this H4 zone. Yeah, there we go. We broke the high. So that high is 604. This high is 629. Yeah. So we broke that. So we're going to get rid of this. So we've now broken this zone. So we're going to get rid of that, get rid of that, get rid of all of that. Okay. So now this is the area that we're going to be interested in, right? It broke this. We're going to be paying attention to this area here. And above this is this. Okay, so this zone is about a 118 pip zone. Obviously, we're not going to take trades at the edge of it. We want to see price come a little deeper. Okay, I want to see price come a bit inside, deeper inside. Um, yeah, so there's a wick there, and there's that candle there. That's the one I'm interested in. 29 pips. This is the one that I'm interested in. This zone up here. 29 pips. 33. Mm. Okay. This stop loss is gonna be there. '79, '76. Okay, so partial positions close there. Um, So I got in right there at the top there, 2667.79. Stop loss is about 29 pips. Falling down further. So I'm anticipating price to come 100. Oh, trade did close. Oh yeah, we dropped. It dropped 50 pips, so the trade did close. Unfortunately, I was expecting price to come down here, but it did close. Yeah. So it did react perfectly to 2667.79 and grab liquidity, 5-minute liquidity grab, and come down. Stop loss was about 29 pips. We dropped about 60, 67, 65, 67, 70 pips. And we had about a 29 pip stop loss, 28 pip stop loss, 29 pip stop loss, and dropped about 67 pips. Yeah, that was just very quick. It's very, very, very quick. Um, yeah, it was too quick. I was anticipating at my final TP level at about 100 or 120 pips, but the trade closed because that was set to 20 and 50. So partial position closed at 20 pips and then at 50 pips, total of 70 pips. Yeah, that's okay. That's okay. So this is the reason I do this. I draw these um, high liquidity zones, and then inside that high liquidity zone, I look for a candle that has either grabbed liquidity or a engulfing candle, right? So here, this was, we had this wick. We had marked this before the session started, well before the session started, right? We had marked this and price, and inside that, we had marked this 5-minute supply zone, rally base drop, and it touched it to the pip and dropped 68, 69 pips. Okay, so that's the trade that I want to take. Low risk, high reward, high probability trade. So 2 to 1, 3 to 1, sometimes 4 to 1 or 5 to 1. Those are the kind of trades that I want to take. Like yesterday's trade that I took was, I think, almost a 5 to 1 trade, right? 15 pip stop loss. I think it ran 96, 97 pips or something like that. Yeah. So price may not come higher. Maybe this is the zone. Unfortunately, I don't have an entry left. So I'm going to just wait for this. Now I'm going to wait for the 4-hour candle to close. I'm going to do anything. I'm just going to wait for the 4-hour candle to close, right? Absolutely do nothing. Wait for the 4-hour candle to close to see if you're going to go all the way up here or we are going to come down. We've already done about 360 pips today. The average daily, the last 3 days, the range is about 344, so we've gone above it by just 5%. So we could continue higher, right? This just means that we are now, price is just kind of, there's a lot of bullish volume. It has a lot of bullish volume. So we could just continue higher, very easily continue higher. So I'm going to wait for the 4-hour candle to close, which closes in about 16 minutes. I'm going to wait for that to close. I'm going to do anything right now. I'm not going to take any more trades. I took 2 trades and both were winning trades with very decent RR. The first one I think had about 1.5 or 2 RR, and this one too had about 2 RR. Sorry, I think 1.5 each. In each trade had about 1.5 RR because I had partial positions closed as well. So, which is decent, which is fairly decent. I had two winning trades, so I'm not going to try to jumping on any more trades right now. I just want to wait for the 4-hour candle to close, and then I believe price should continue higher, right? We've already reached the daily our daily range, but price could create a low wick and then continue higher. Because the daily, let's go back to the daily. Yeah, we're coming back to this weekly resistance area of um, of 2672, right? That's where price is coming. We may fall short of it, but price has broken the previous daily high, right? So there is liquidity here. Above this wick is liquidity. So price can grab liquidity and push down too. That's possible too, or retest 2672. So for either one of those, I'm going to wait for the 4-hour candle to close. Going to wait for the 4-hour candle to close. We are creating wicks here. Support is forming here. And we'll wait for the 4-hour candle to close. 15 minutes more. So that's a 15-minute candle. Grabbed liquidity from there. But I don't want to take any trade right now because the 4-hour candle is about to close. So I don't want to do anything right now. Right? I'm not going to do anything until the 4-hour candle closes. If price respects this high, then we're coming down here, 265, 250, to this support level again. Right? We're coming back down there if it respects this high. But this 15-minute candle has to respect this high. If this 15-minute candle breaks the high, we're going higher. Yeah, that I wouldn't take that trade anyway. I wouldn't take a trade here anyway because that's not a stop loss I'm comfortable with. 40 pip stop loss, it's just borderline uncomfortable. 35 pips is still okay. 30, 35 is okay. 40 pips is just borderline uncomfortable, but price is reacting to it and we could drop here. And that's fine. If that happens, as fine. I don't need to take another trade. So this candle opened at 1645 here. Zero 07242. Yeah, so we tap the mid of the fib to the pip. That's what this candle did, right? Touched it to the pip of that liquidity candle. Now we're coming back up, touched it to the pip. So if you break this candle high, we're coming to this candle. And then the next is that candle there. Yeah, this candle here. But price may pause here. 77, yeah, perfect. Just perfect, right to the pip. Just change the color so it's more visible. There. That's the candle that we had marked right at the beginning of the session. It touched the mid 2667.77 or 2667.79. That's where I had the entry. 79. I had a pending order there. Did I place a pending order? No, it was a market order. And price touched it, and now it's struggling there, but we could break the high and we could continue higher. Yeah, we could continue higher. Yeah, there we go. Ten minutes more for the candle to close. Came down there. That's the other candle that kind of want price to come to. This one right here. 434,944. 434. We break this high, then we're coming into the other next fib level, which is here, 2672. And I might take an entry there, right at 2672. If we tap into that, if it break this high and it comes to 2672, I might take an entry. Stop loss is about 22 pips. Yeah, there we go. Should break this. We also have news in about 6.5 minutes. Should break. Should break. Yeah, here we go. 68. The next 5-minute candle should break the high. Yeah, broke the high. Get rid of that. That. Coming into this fib here. So this fib, yeah, that's close. Delete that one. Thirty pips. That's okay. Did we tap it? Not yet. Oh, hmm. I should wait for the 15-minute candle to close. Or fuck. Should have placed a pending order there. So I placed the pending order there. Yeah, that was the place for the pending order. Oh man, that was the place for the pending order. Just had mark 71.26. The next candle didn't come back to touch it. One eight two two oh four. That sucks. 34 pip drop. So very tight stop loss. 29 pip stop loss. I'm going to take a trade here. As soon as we tap into that, that's a 15-minute close. Tap here. I'm going to take a trade right there. Oh, sheesh, just dropped. That was the just slipped on that. It's just slipped, but that was the spot right there. That trade just slipped a 40 pips. Three. That was the entry right there that I missed. Placed that line right at the beginning of the session, but I didn't take the pending order. Tapped right here. Should drop right there. Tap right there. Should drop. Gonna place one there. Position right there. At the mid of the fib. So 4 eye is very bullish. The 1 eye is also bullish. 30-minute, 15-minute. Close. 956. 956. That should have been the second. That should have been the entry. I didn't get that, that should have been the entry. Supply zone, rally, base, drop. It should come down here. Should come down to 2662. Should come down to 2662. We did tap 2672. High 7182. 72. See how this 15-minute candle closes. Should come down here. Should come down to break this low. 57. Ideal stop loss should have been 8 pips and yeah, about 20 pips and 8 pips. But I missed that. I should have placed pending there. I just missed it. I didn't. I'd marked that line right at the beginning of the session, but I just didn't place the pending there. That's okay. That happens. Yeah. So we're creating. So let's look at. Yeah. So we've got support right here. Here we've got also a level right there. So okay. Yeah, perfect. There's a saddle level right there. So price there's a level right here as well. Five, 4, 3. 3. 6, 3, 5. Okay, and then there's a level right here. Support level right here. That's where we're coming to right now. Perfect. So we're gonna close this bad trade right here. It's gonna wait for the 15-minute candle to close. Okay, I'm gonna do anything right now. This open is 927, 927, and then this high is 6016. Okay. Oh, stops would come to break even. I'd forgotten about that. Okay, let's see where this 15-minute candle is closing. Okay, that's fine. That's created a wick to range trade if it needs to go down. That's okay. So partial positions have closed on all of these trades. So that's okay. Yeah, that's 115. That's okay. So this one, 2661. Okay. This trade is going to get out here. It's going to get out here. 2660 maybe. 60. No, 2661. Yeah, 2661. Then the next one this needs to get out at 2657. 2657. Right there. That's 100 pips. So that is 34. That's 100. Then the one after that, we will let that run to this. Two six five two. 2653. 2653. Okay, perfect. Right. So we're going to let those run. Stop loss, we're going to close it. We don't have any pending orders open, so stop loss is going to, sorry. Stop loss is above this candle high, which is 71.82. 71.82. Just keep it. 2.02. Okay, perfect. Right there, that's a stop loss. That's just fifth. That's, yeah, on that position. That's a bad position. Anyway. Okay, and that's tighter. 32. Okay, 30. Perfect. Okay, so this one is about 100 pips, and if you come down here, that's 158 pips. So yeah, so we took 3 setups today. I took 3 setups today, and they all worked. All 3 of them worked. I'm blessed, fortunate that all 3 worked. So we broke. So 5-minute candle closes below this. Coming to the next one, we are falling. We should hit this 2657. That's the next support level. So this candle needs to close below this or close inside the gray box. If it closes above, then price is going to go back up again, right? So it has to close either below the gray box or inside the gray box, because that is there is a support, there is a SR level there, right there. Okay, you can see that price touch there, touch there, touch there, Okay, it touched all throughout. So that is, price has to, a 5-minute candle needs to close um, either at it or below it to come to the next support level. And then the same thing goes for the next one. Needs to close at it or below it to come to the next one. Um, okay, so we closed below it. So now we should come down to this support level. We'll probably pull back up to make a top wick and then come down. How long have we been here? Oh, we've been here for 2 hours and 45 minutes. Okay, so I'm going to end the stream in about 10 minutes. Okay, because yeah, 2 to 3 hours is my trading time. So fortunately, this trade came in um, just with the news instead of an hour later or 45 minutes later. I wouldn't have been here then. So it just came in at the news. So I'm going to wait for another maybe 5 minutes and I'm going to end the stream. Stop loss is just above that M30 candle. So that's the M30 candle there. It's just above there. Partial positions have closed on both those trades. So it's just got a very small position running. This TP is about is at 100, just over 100 pips, and this one is about just over 150, about 160 pips, right? I might even move it a little further down, depending on where the H1 zone is. Um, no, that's fine. That's fine. Where it is right now, it's fine. 2653. That's absolutely fine. Price needs to come and tap this, and then if there is volume, we come down further. The daily is rejecting that area. It grabbed liquidity from above this wick and it's now trying to push down. Let's see if you can come back and retest 2650. So then what it would be is basically price kind of closing above 2650 and then coming back to 2650. That's what then the New York session would have done. That's about a 225 pip range. That's fine. So that's the um, ideal tap that you want to generally see from this light red zone. So when I mark these zones, I also mark, as you would have seen in the past, if you watched my previous sessions, you have seen when I mark supply, a dark red box, a high liquidity zone. I also mark a lighter red box inside to where I believe price is going to come. So when it comes to that area, this is the kind of 5-minute candle you want to see, or you want to see a 1-minute liquidity grab, which is kind of that. That's just kind of a doji. So grab liquidity, pushed up to grab a little more liquidity and come down. That's the news candle. That I really don't care too much about. But on the 5-minute, that's the kind of candle that want to see a very nice rejection from there. So if you do see a candle like that from that box, then you can even take, as the next candle breaks the low, you can take it out, put your stop loss above that, and then anticipate price to come down to maybe this minor support level here and further down, right? So if you took it out there, that's about 60 pips, 65 pips with about a 40 pip stop loss. Not bad. Um, so the goal, as I said at the beginning of the session, the goal is not to pursue high RR trades. That is not the goal. That has never been my goal. My goal is trying to be, following these 4 steps basically, right? Finding, drawing supply demand zones correctly on the H4 time frame, identifying high liquidity zones, uh, drawing support and resistance levels correctly, and waiting when price gets entry, waiting for price to move from one level to the next, right? And then when price does go against me, manage risk. So as much as you would get excited when you have a winning trade, right? You should also, at the end of a winning trade. So when price hits your TPs, you get excited because you believe you did everything right. You should also get excited at the end of a losing trade. At the end of a losing trade, so that if you manage risk, then you have lost less. So at the end of a losing trade, you should be as excited as you were in a winning trade. Okay, so I'm going to be here another 6 minutes, and then I'm going to end the stream. Okay. So price close back above this support, so we close back below, we close back above. The 15-minute has about another 4.5 minutes to close. So price could pull back. The next 15 candle could pull back and go above this wick. That's very possible. Okay, that's very possible to go above this wick because this candle has no top wick. So price can pull back and go to create a top wick, and then maybe go further up or come down. But this candle has no top wick. So either this candle pulls back up, the current candle, or the next one could pull back up and then either go up or continue down. It's fine. So this was the candle that price finally did come back to and reacted quite a bit at. This candle and the supply zone right at that candle, right? So the mid level of that fib was 89. We come to 89, high 82. Yeah, almost. Because there was a supply zone right there. So instead of coming to the mid fib, it reacted to the supply zone and then dropped. Right. Okay. All right. So that's going to be the end of the stream. So price may pull back now, as I said. The next candle is going to break this high, or this current candle breaks the high in the next 20 seconds, or the next candle breaks the high, comes up and maybe go higher, or maybe grabs liquidity and goes down low, right? But we are reacting to this support level that we have drawn. Price is reacting to it, right? So 5-minute candle closed below, the next one closed back above, the next one broke the high, and we're continuing higher. That's the M15 high here. We're going to take that out. So once we take it out, when price comes back to my entry, I'm going to manage risk. Okay, I'm going to close. I'm going to close this entry, and I will maybe leave the other entry, but I'm going to close this entry if price comes back to. Okay, so all right, that's the end of the session. I'll be back here tomorrow and going to repeat the same process tomorrow of drawing our zones and waiting for price to get to our zones. Okay, see you guys tomorrow.